You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we'll talk some rates. Maybe we'll talk some ags, some metals, some energy, some equities. You never know what's going to make it onto the old tape. Last week we talked some dairy, huh? Go figure. You never know what's going to make it onto the tape. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting The Options Insider Radio Network. Pleased once again to be joined here in studio for the live TWIFO broadcast by my FTSE Russell compatriot, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the program. Welcome back to the studio. You made it here in, what do we have, 5 feet of snow now?
It's unbelievable. Yeah, it's great to be here, Mark. Thanks for having me. It's always great to be on TWIFO. It's just fantastic. I got to tell you, outside is just wrong. It's Halloween snow. You can't see as you're walking down the street. It's the wet, sticky, heavy snow. It gets right in your eyes, and it's just winter. We just need a little more autumn in this town, unfortunately.
Yeah, I'm not there yet. I'm not ready for the Yule logs and all this winter. I'm not there at all yet. I need a nice. I was excited to go trick or treating. Halloween's like my big holiday, and here we are. Got to shovel our way out to get there. My little guy's got a sweet electric proton pack. He's a Ghostbuster. You can't carry that out in the middle of the snow. So yeah, not looking good here, Sean, for our prospects for trick or treating. But you know what else is going on this week? Also, probably you could argue dubious timing because they had it all the way through Halloween. Is of course the big Futures Industry Association Expo down here in Chicago. The entire derivatives world descends on Chicago. I mean, this is always the Mecca, but then this week it really becomes Mecca, particularly on the future side. You get firms and brokers and exchanges from Latin America, from Asia, from Europe, everywhere. It's kind of a who's who of the spaces down there. I took a little bit of a tour down it yesterday. I saw you down there, so I know you were down there, Sean. So first off, what brought you down to FIA this year, and what did you think of the event? Did you find any interesting nuggets, any interesting conversations, any interesting pearls of wisdom come through your booth there, sir?
First, I just want to compliment Walt Lucan and company. The Futures Industry Association just does a fantastic job of bringing really relevant, important information that comes with all of our exchanges, our partners, our regulators. It's just a fantastic show that he puts on, and it couldn't be better for the industry to get together like this a couple of times a year here in the States, and he does this in Europe and in Asia as well. He's got Futures Industry Association conferences, and the content globally is just fantastic and relative to what's going on in the marketplace. But there's been some great panels this week. The exchange leadership panel was fantastic. The clearinghouse, the CCP clearinghouse today was good. I think one of those hot topics was more skin in the game kind of discussion from CCPs, and I think our exchanges are doing a fantastic job. CME's clearinghouse and OCC, they just do such a fantastic job of managing the risk. You never hear that in the 08 crisis that there was a problem in the Chicago clearinghouses, right? It was
everyone thinks in 08 or even back to 87, right, that it all started in, like you hear it started in the SPX pit or the OEX pit, right? But there never were any actual issues in the options. Everyone labels derivatives as these super crazy risky things, yet nothing happened here. It was all on the other side of the fence.
Exactly. And just to get right into equities, OCC and CME's clearinghouse has a cross-margining arrangement where if you're trading SIBO's Russell product, you could trade CME futures as a hedge, and you get that margin offset. So it's a great relationship here in Chicago, the center of the universe for derivatives, and the conference was fantastic.
Definitely this week. I'm curious, what was it that FTSE Russell was hawking? What wares were you promoting front and center down there? It's a futures show, so I'm assuming it was maybe the RUT future. What was front and center for you guys down there?
Front and center for us is bringing more awareness to Russell 2000, the index. We're really trying to bring more eyes, more users to trade Russell 2000 futures and options on both of our partner exchanges. So we had lots of discussions this week.
And how did that go? I saw you talking to a variety of personnel from across the globe. What's the uptake been? What was the response to? Because I'm always fascinated what an international clientele thinks of domestic small cap stocks like the Russell 2000. So I saw you talking to a whole bunch of different international folks down there. What's the response been?
It's a domestic small cap stock index with a global reach. It's actually a great trading vehicle. People are finding tremendous opportunity. 10 to 15% of Russell 2000 mini futures and now micro futures trade out of Europe. And as I think we've brought this up several times on the show, and the traction in Asia is growing as well. The reach from SIBO and CME into these regions has just been getting better and better. And just you bring awareness, they put it on their screen, they look at the symbol, and all of a sudden they see, wow, this is volatile. Whoa, it's liquid. And they start trading, and they continue to trade. So these are really hot spots for both of our partner exchanges.
Glad to hear that the international audience is resonating with the Russell 2000. And since we're talking equities, we can start there. Or do you want to start somewhere else? Let's go equities. Okay, I think we can make that happen here, sir. First off, before we do that, let me do really quickly our top 5 or top 10 total, really, movers and shakers for the week. I'll let you choose here too, Sean. Do you want to go dark side or light side? Where should we start?
Let's go light.
You are quite the optimist. I like that. That's what I like about you, Sean. All right, let's go.
Full, always.
Let's go to the upside first. Our top 5. Again, these are the big products moving over there and shaking over there on CME Group. You want to follow it along for yourself? CMEGroup.com/TWIFO or TWIO, TWIO. They both work. You can find either one there. CMEGroup.com/TWIFO or TWIO will get you to what we're talking about right now. Let's go to the top 5. The bottom of the top 5, feeder cattle. Don't say that one too often. Up about 2.4% this week. Number 4, we were just talking dairy. Sean, dairy last week. All of a sudden, dairy is like the hot commodity out there, pun intended, out there. Not a big option story, but it's fascinating to see dairy lighting it up. It continues to light it up this week. Class 3 milk up nearly 5%, 4.85%. Number 3, iron ore, one a lot of you have written in about before, asked us questions about. We've done deep dives into it. Problem is, doesn't really trade from an options perspective. Up 5.83% this week. Then Nat Gas continues to boom and bust to the upside, to the downside, having a boom week again this week, up nearly about almost 8.5%, about 8.3%. And then Eurodollar is off to the races this week, Mr. Sean, up 14% to the downside. We've got heating oil. Actually, let's reverse that. To the downside, we have number 5, soybean oil, up about 2.4%. Then we've got wheat, off 2.6%, then WTI off nearly 3.7%, and then Brent followed hot on his heels by Brent, about 3.9%, and then number 1 with a bullet to the downside is heating oil, up about 5.25%. So, Mr. Sean, you said you want to start in rates. I think we can do that. Listeners, you can do that yourselves. I'm not sorry, not rates, equities. If you want to do equities, pull that drop down there. You go to cmegroup.com/TWIFO, grab that blue drop down, click on equity indexes, and then go to, let's start in Russell land, because Sean's sitting to my left here. We'll start in Russell 2000 land. I like to hit the view all, but to each their own. You pick your poison here when it comes to all things Russell 2000. Let's see what we got here, Sean. Well, let's start off here. I know you've been traveling. This week you were traveling domestically, but what's been the hot button topic? What's been the thing, the clients, the end users, the market makers, whoever it is you're talking to out there, institutional users, what are they bringing up to you these days when they want to talk, rut options and options out there? What are questions, concerns, issues, things they like? What are they seeing out there?
They're seeing the fact that first of all, Russell has seen a spike in volume in the last few weeks, which is really exciting to see on both exchanges. I think that's just due to the market conditions and some volatility in the market, and there's been a lot of discussion about small caps on the news. If you've got CNBC on your big screen during the days you're watching the markets, there's been just a lot of exposure, bringing up the Russell 2000 and small caps, and them not so much as outperforming the other indexes, but the fact that they are a volatile gang of stocks. Those 2,000 stocks are showing some volatility. So I think that it's healthy volatility and tradable volatility, which makes it fun for the market.
I like that. I think you coined a new phrase, a volatile gang of stocks. I think we can run with that, Sean. I could put out some releases. What do you think? We could rechristen the Russell 2000 a volatile gang of stocks. What do you think?
I think it's a great idea.
I like it. That'll get some traction. Some folks will want to invest in a volatile gang of stocks. If you wanted that volatility out there in the Russell, you got it this week, listeners. The Russell coming into the end of the week has kind of been a topsy-turvy week for the equities. We're back on the downside again towards the latter portion of the week. We're seeing continued concerns about the trade war continuing to spook people out there. It seemed like maybe it was a done deal for a little bit, then not so much. The Fed feeding into that as well. We'll get to the Fed in a little bit when we talk about rates here. So all of the major indices were off coming into showtime. The Dow is actually leading the charge to the downside, off about 0.75%. Don't see that too often. Usually it's the NASDAQ. NASDAQ was the laggard, off about 1/3%. S&P about 2/3%, right in the middle there. And Russell coming into showtime actually is kind of the laggard to the downside as well, only off about 0.2% here net on the week. That puts it down about 5 handles close to it. That's seen vol coming up there, of course, in the equity land. You sell off in the broad index, the vol is going to come up, and vol's up pretty strong in these front couple of the contracts. Both of these are going out pretty soon, pretty much today, tomorrow. So not a lot to be seen from a vol perspective. That's mostly gamma. Let's go out a couple of weeks. Let's go out to that NOVE contract here, and vol up still pretty firm out there, about over a point, about 1.2 points. So again, Sean, back to your point, if you kind of wanted vol this week, seems like vol never really went away that hard, and it stayed and is back again here. And in fact, let's look at it again, because last week we had a VIX at about 13. We're at about a 1335 right now, so the VIX is up a little bit, about 1/3 of a point. We're seeing the volatility of volatility, which is about an 86.5. So that's almost exactly unched from where it was last week. So the vol of vol has kind of stayed constant. And our old friend RVX, this is kind of like the 3rd or 4th week in a row, Sean, I'm saying this, down, but pretty much effectively unched, not even a 1/3 of a point here. It's about a 1740, almost a 17.5. This is kind of interesting. This is the first time I think that I've been watching Russell vol since you guys have been participating on the show for a while, certainly in the last month or so, where it seems like almost every other week I'm coming in here and saying net on the week, Russell vol is unched. That's kind of interesting. Is that surprising to you?
Actually, no. As I have spoken many times about volatility, I'm surprised it's not a little higher right now. So, but yeah, the small caps are just naturally a more volatile index. So
yeah, we're still hovering right around 17.5 out there in the RVX, which is of course the VIX of the Russell 2000. That puts that VIX RVX spread at a tick north of 4, about 4.05. So effectively unched from last week, slightly about 0.05 wider really from last week, but not a huge change out there. Let's see what's lighting it up out here from a Russell 2000 options perspective. A bit of a change from recent weeks. In fact, I think we have a listener question about this a little bit, so I won't get into the puts too much. But I don't have to worry about that this week because actually it seems like a little bit more than a third of the paper going up in DC on the call side of the ledger. This is the first time we've seen a lot of upside calls lighting it up. We're coming into showtime. We're at about a 15 double or so in the Russell 2000, and it's the 1,600 calls in DC that are leading the dance out here this week, which is kind of interesting. Sean, actually, we have a listener question about this. Maybe we shouldn't go into it too much right now, but I'm going to touch on it anyway because it's kind of fun. We have talked about it before. It does seem like the trading pattern consistently out here with these RUT options week after week is the largest prints are out there. Someone's playing, rolling, doing whatever they are, and pretty far out of the money and pretty far out in terms of time puts. And that's not the case this week. It's upside calls, the 1600s to be precise. Does that surprise you, sir, that we're not back on the put parade this week?
Not at all. So, as you get volatility in Russell, the calls are to write calls is actually a great strategy, and there are those buy right indices that are listed at SIBO as well. There's put right indices as well. So there's ways. There's a lot of attention on option volatility in Russell. And I'm not surprised at all. Risk reversals are a big trade. They like to sell calls and buy downside puts as a strategy. So I'm not surprised at all.
Not surprised at all. Save some not surprised for that listener question we have about that in a little bit there, Sean. We got a lot to unpack here on the show. I know you're always a rates guy. This is a rates week. Should we dip our toes into rates next, sir?
Let's go there.
All right, let's do it. Let's go there. He said, let's go to rates. You too can go there, of course, listeners, cmegroup.com/TWIFO, or you can come up with what our next one is, which you have a listener question about this as well. Of course, you're talking rates this week. You got to talk Fed. Fed coming in, pretty much doing what everybody expected here on the show, and indeed in the markets. Looking at the FEDWATCH tool, it was pricing in roughly 95%. Last time I checked it or so, that the Fed was going to do pretty much exactly what it did, cut by a quarter of a basis point, and that's pretty much where we got, or a quarter of a point, I should say. Quarter of a basis point might be pretty small. Quarter of a point, and that's pretty much what we got out here this week. By the way, since we're talking FEDWATCH, let me pay off this question really quickly. This one comes from Neil. Going to cheat and bump him up. He says, what is FEDWATCH saying right now about the cut in DC? Listeners, you guys can find this for yourselves. We'll do it for Neil here, but in the future, you guys can do this yourselves. Just type in CME and FEDWATCH. It'll get you right there. Or even type FEDWATCH. Probably get you there as well. And you'll see what I'm seeing right now, which is the FEDWATCH tool. Our next meeting, if you're just counting the minutes until our next FOMC meeting, is in 40 days and 23 hours and 12 minutes, Sean. So mark it on your calendars. Get ready. We'll have a big party in here. And looking right now, people have talked a lot about how the Fed has kind of fired off all their bullets. This is the third cut they've had over the course of the past year. So not a lot of ammo left, arrows in the quiver. Pick your metaphor. We'll butcher it here on the show. But not a lot of ammunition left for the Fed, and looks like the market kind of agreeing at it. Right now, Neil and everybody else was wondering, the market's pricing in about a 75% probability they're going to stay right where they are. I'm actually surprised, Sean. They're saying 25% chance they may cut again by a quarter point. That seems fairly aggressive. I'm surprised it's that high. I thought it would be about a 6%. What do you think?
I'm not a guy to speculate. The Fed, I think, does a great job. So
you're an old school Eurodollars guy.
Yeah.
You could weigh in a little bit.
All right, 25% is still a pretty strong probability.
It is. Yeah. That surprises me. I would have thought it would, like, sub 10, definitely. But that's not what we're seeing here, Neil and everybody else. So a little bit surprising. These numbers obviously are prone to change. We're right in the first blush as we approach that number and that announcement. This is going to obviously change. But let's get into some of the paper out here. But yeah, I'm surprised here, Neil, that this is as high right now. I 4 cuts. That would be a lot. I don't know. At that point, what's left, Sean? What else can the Fed do?
Yeah, exactly.
They come knock on your door and say, here's $10,000 for each of you. That's the next step. That's the next step for the Fed. Because, yeah, at a certain point, they need to save some ammunition, listeners, in case things do turn south, in case housing market or the economy or inflation or the market, they all start turning south. The Fed needs to have some ammunition for those. And right now, they don't really have any. We're cutting rates and we're markets at all-time highs. So an interesting, some may say aberrant scenario. Speaking of aberrant, Sean, there's no other word really to describe the paper that goes up out here in eurodollar. I'm looking at eurodollars right now. I was talking with someone about this at FIA this week. Just what a monster this product is. I mean, we talk about these other complexes. We'll talk energy, we'll talk gold and other things, and they'll do 40, 50, 60, 70, 80, maybe 100 some odd thousand contracts. Eurodollar is doing that in one option, not even the strike, just one call or one put on that strike. Like, let's look here right now. The front nove put here in eurodollars this week. Eurodollar should say, looks like ever so slightly up, quite almost unched here on the week, hovering right around that 98 pretty much and an eighth level. And that 98 even put, listeners, actually I take it back, 98 and 3/8 put, doing 243,000 contracts on the call. 98 and 3/8 call, Sean. 243,000 contracts just in that one call. You know, that's, I haven't done the quick math here, but I'd probably add it up. That's going to be the next 4 or 5 complexes we talk about in aggregate. That's going to exceed them. And that's just one call, Sean.
One strike. It's amazing. The liquidity in the eurodollar complex is just amazing.
It is almost mind-numbing, just the amount of paper that goes up here. Looking at the vol, vol's a mixed bag here as well, front portion of that curve, which gets out into NOVE, which was one of the active contracts out here, and DEES did about 20, almost 21% out here this week. This is the one where if you hit select all, buyer beware here, because you see, I had to do that right now. It's a lot of data. I'm scrolling for days here, listeners. So maybe you want to go with the old synopsis on the Eurodollars page to make your life a little easier. But if you look in here, you see DEES did almost 21% of the paper here this week. The vol off pretty hard out there as well. But of course, obviously makes sense. Some event risk was obviously priced in. Vol off 7, nearly 8 points in that DEES contract here, that front DEES contract for 2019 for the Eurodollars. So interesting stuff. Let's look at the skew here really quickly. The skew in Eurodollar is not a huge mover, but this week it moved a little bit to the call side. The puts were kind of unched, both about 9.3 to 9.1% cheap to the at the money, but the calls were where the action was. 10.4% rich last week. This week, 13.1, so they're even more bid. Vol comes in, call getting a little bit of a lift out there, pretty aggressive lift out here. It makes sense with these 98 and 3/8 dominating the tape, nearly 250,000 contracts. You know, that's an entire day for a product like VIX on a day like today, Sean. They're doing it in one call strike here in the Eurodollar. And VIX is not a low volume product, and yet that's what we're seeing. Or in the S&P future options, pick your poison of a very liquid product. And the Eurodollar is lighting up. Really quickly here, another listener question, Sean. Listeners are peeking into the show here today. This comes from NTILL. He wants to know, he said, do you guys see the recent issue with the Eurodollars quotes? Maybe this is what's driving some of the volume in the options lately. He's referring to an interesting story here. I think this was in the Journal, listeners, entitled Futures Exchange Reins in Runaway Trading Algos. And this just came out a day or two ago. And it says over the past month, the volume of data generated by activity in the CME Eurodollars futures soared tenfold. This is according to CME's own statistics. Now, you drill in a little bit, and it's not, you might think, oh, the futures are lighting it up. That's obviously driving the options, but not so fast. It was actually quote traffic that spiked 10x, not the volume so much. That means people are really coming in, cancel, replacing orders really quickly out there to the point where it's almost getting dangerous for the marketplace. It makes it hard to transact when something's flickering in that quickly. To the point where last week CME came in and announced new restrictions on cancel replace orders, and that seemed specifically for Eurodollars, and that seems to have tamped down there on the traffic. They're blaming this effectively, Sean, on 2 different firms whose algos effectively got into a loop and were outracing each other, and as a result, they continued to generate just massive amounts. And they have a great chart in the article of about 10x. Quote traffic here versus the traditional thing. What's weird about this is that, that stuff happens. It happens in all the products. Usually it lasts for a couple of minutes, right? Maybe an hour or two if it's really crazy. This lasted for days, which is kind of interesting and a little bit aberrant, particularly for a product that does a lot of paper like this. So I think the short answer to your question here, who wrote that in NTILL, is no, that wasn't driving volume. That was just quote traffic. But still interesting stuff, Sean, that a product like this, as liquid and as deep as it is, could have such an issue going on and that could last so long. Does that surprise you as well?
Yeah. The CME's technology has just enhanced so much. And I say this because I used to work there. But they've gotten really good at reducing the size of messages from a technological perspective. And I'm not an IT guy, but I know that this has been something that the CME has been improving on since markets started trading electronically. I remember their very first $1 million days or $1 million contract days on Globex. That was a big deal, and that was a lot of traffic then. So now, volumes just dwarf that. So in order to do that, you got to have clean pipes with efficient messaging, and I'm actually surprised to see that. But again, the algorithms spinning around and hitting each other, creating this multiple of messaging, I think is how you put it. I think it's really good that the CME has addressed this.
Yeah, they dove in. Sometimes those things need to be reined in. It sounds like it was, and they did it. So, yeah, to answer your question there, Until doesn't seem like that was driving a lot of volume, but it was driving a lot of messaging. Which, if you're looking at the space, you're trying to get something done out there. A flurry of cancel replays all over the place is kind of obscuring. Actually, it actually could have been contrary to getting a lot of volume out there because all that noise is going to bury the signal a little bit, which makes it harder to trade out here. Should we hang our hats in energy next, Sean? That was lighting up the top 5 to the upside and the downside this week.
Energy, let's go there. Yeah, absolutely.
Let's go there. All right, let's go to energy here. Let's kick it off here with our old friend WTI. Rough week. WTI was in our movers and shakers, though not in the right direction here this week. Listen, WTI was number 3 at about 3.7%. Number 2 was Brent. Number 1 was heating oil, off 5.25%. We also had nat gas to the upside, up 8.3%. So a crazy week on both sides of the tape here for WTI and for nat gas. Let's go to WTI here first. WTI coming into the week, again, a lot of these concerns over the lingering trade war issues. People had been hoping that, WTI would catch a lift here, but with the trade war maybe behind us, trade war is not behind us now, and so WTI taking another hit this week off. Coming into now this latter portion of the show here, off about 4.6% here on the week. That puts it at about 2.6 handles to the downside. Shy of that 55 level again, about 54.07 coming into this part of the show here. So interesting week here for WTI. Vol up again out here, which is kind of interesting. Up pretty firm too. Up multiple points kind of across the term structure. So a little bit of bid for WTI vol out here. The hot month out here, the hot contract was decent, with a little bit over half, 54.3%. So let's look at the skew out there and see how the skew is moving. We've been talking, remember, for a while. What's it going to take to get the calls bid? Maybe it was this week a little bit. Let's see. The puts were 4.1% bid to the at-the-money this week, 2.9%. So the puts came in, and the calls were 1.2% cheap to the at-the-money this week. They're 2.5% rich. So they got a little bit of a lift. It's kind of interesting. Sean, this has been an ongoing narrative of us here for a while. In fact, last week we had Mr. Rhodes here holding down the FTSE Russell hot seat on the show last week, talking a lot of equities. But we also did talk a lot of energy and other things as well. And he mentioned, which has kind of been an interesting thing, the calls in WTI cannot manage to sustain a bid. In fact, the one day you think it would have, right? The day when the Saudis got attacked, 5% of crude production wiped off the board. As Russell mentioned on the show, the bid for the calls lasted about half a day, Sean. That was about it. That's about as long as they got before the market started crushing them again. Isn't that crazy?
That's I didn't know that. So yeah, that's pretty interesting.
You think you could get at least 24 hours of something out of that, right? A little bit of Sturm und Drang, things moving. But no, these calls can't catch a bid, and maybe that's changed this week. The calls skew is turning it up a little bit. Let's see what was trading out here that may have driven that, Sean. Out here in D, looks like the number one trade overall. Remember, we're just talking eurodollars. 250,000 contracts in one call. A little bit different beast here in WTI. WTI is active, but we're talking about 364,000 contracts this week. Pretty active, but you're talking a couple of call strikes in eurodollars. Let's see, there's 60 calls here. We're number one with a bullet here in Dees, doing 11, almost 12,000 contracts. The big day was Monday, about 4,500, 3,300 yesterday, about 2,200 today. A decent chunk of that closing, so that isn't going to bid up the calls because they're closing out some calls. Unless, of course, they were short calls and they're bidding them up. That could be the case. Either way, though, 60 calls leading the dance out here. Number one with a bullet. Also, pretty close, though. Pretty close. Hot on its heels were the 50 puts. So a nice tight strangle / risk reversal, call it what you will, 50-60 out there, right around that at-the-money strike, which is near 55 right now, about 54 and change. Talking about 11,500 of the 50 puts going up this week as well. 3,200 on Monday, 3,000 today, 2,700 on Tuesday, and about 2,500 on Wednesday. So a pretty even day, or I should say even week here for the puts. And a good chunk of that opening. So calls closing, Sean, puts opening here. Not exactly surprising when you're seeing WTI having another week where they continue to sell off. On top of the trade war demand, we also saw numbers coming out of the U.S. EIA saying crude inventory is increasing by 5.7 million barrels from last week. Inventory is now at about 439 million barrels. That's about 1% above the 5-year average for this time of year. So you all know the other side of that equation, international demand, which is weak, and strong supply, that combo, it's going to weigh on WTI, and that's exactly what it did here this week. Really quickly here, I want to look out at nat gas too, because nat gas was kind of bucking the trend, Sean, from an energy perspective. Everything else on the energy side was selling off hard this week. Nat gas almost leading the dance to the upside. It was up 8.5%. Let's see, 8.3% here this week. It was the number 2, only behind the eurodollars, which are up 14% this week. Eurodollars, as you said many times, kind of its own beast. But nat gas has been a fun story, Sean. It sells off, it rallies, it sells off. It's been kind of a very turbulent one to watch. Now we're in the rally mode here again. It seems like a lot of people are holding out hope that there will be a very cold winter. You know what, Sean? Maybe the snowstorm today is what's driving nat gas, because this seems to be reinforcing that narrative that we're in for a pretty garbage winter here, Sean, which is obviously a bullish story for nat gas.
Well, we're using a lot of nat gas with the weather going on right now, that's for sure.
Yes. Somebody might say we're spewing a lot here in the studio as we're talking here, sir. But yeah, all this freezing cold weather here on Halloween and the prospect for more, it seems to be what's driving nat gas. It's been a crazy week here. We had a decline last week. Now we're looking at this article. I'm not sure when this came out. They were saying they were looking at a 17% gain for the week. Obviously, I think that was yesterday. Right now, it's just come off a little bit during showtime. It's just about shy of 7% here on the week, but still an interesting movement. Earlier in the week, it was hitting the highest level and one of the biggest movements we've seen since January of 2014. So hot times out here in nat gas. Again, a lot of people looking for this crazy, tumultuous, frozen winter here, which I got to say I'm not a huge fan. I'm not ready for, Sean. I'm not ready for a terrible winter. But, it does sound good, because last year they kind of cursed us. They jinxed us when they came out and said it's going to be a very mild winter. I know once they say that, we're in for a Siberia, which is pretty much exactly what we got last year. Frozen tundra, minus 30 degrees. It was terrible. But, they're saying it's bad this year, Sean, which I'm very contrarian when it comes to that stuff. So might be a good sign for us. What do you think?
That's why I carry an umbrella, because it never rains when I carry it. I only get crushed when I don't have it with me. So, the contrarian works sometimes, so hopefully it jinxes us in a positive way.
I'm down for a positive jinx. Halloween, this early data set, not encouraging, but we'll see. We'll see how the rest of the season holds up here. Coming into showtime here, nat gas up almost 7% right now here, coming into the latter portion of the show. We're seeing the action here was in that D's contract, that D's 2019 contract, 56, almost 57% on a contract that's going out in about 25 days. Let's see here. The vol up pretty strong out here, up nearly 4 points in that contract as well. Not surprising. Big moves are going to translate into some vol. Let's look at some skew here really quickly. The calls are kind of unched, which is weird for a product that had such a huge upside move this week. It was 6% bid last week, 6.1% bid this week. So the calls haven't really moved. The puts have gotten bid up a little bit, though. They were about almost 4% cheap to the at the money this week. They are 2.1% cheap to the at the money there. All right, now looking here at what's lighting it up out here from a contract perspective, I should say. We said we're at about a 2.65 strike. 2.65 strike seems to be around at the money. It was actually 2.25 puts that were dominating the tape this week, doing 30,000 contracts out here in D's 2019, listeners. Let's see what they were up to out here. The big day was actually today, about half of that, 12,000 going up today, so close to. Actually, it was 30,000 contracts, so not quite half, but pretty close to it. And then we had Tuesday, the other big day, with about 10,400 or so on Tuesday and about 5,800 yesterday. Since so much went up today, we don't know the net open interest, obviously, but a lot of that so far this week has been opening. So opening downside put paper here in nat gas. I don't watch nat gas enough to know if that's traditional type paper. I'll have to get some nat gas guys on here to talk about what they say. I'm going to go out on a limb and say that's probably not. I think the calls are where the action usually is on these types of moves. The calls were pretty active, though. The 27, almost 28,000 of the three even calls. So that's about, that's getting closer to at the money than it was a little while ago, threatening the three now. We saw 10,000 going up on Monday, almost 10,000 even, 7,300 on Tuesday, 6,300 on Wednesday, and about 4,300 today. Total of about 27, almost 28,000. And net opening pretty much as well, about 5,000 net openings. Opening upside opening on the put side, but ever so slightly to the 2.25 puts as well. Also, really quickly here, 2 even puts, a lot of puts. Maybe it looks like Tuesday, 10,000 each one. So maybe there was a vertical on Wednesday. Maybe some 2.25, 2 even, maybe some roll downs, Sean, of some puts here, because the OI, the volume is kind of lining up, except for today. We saw about 5,000 and change on both strikes on Wednesday and about 10,000 and change on Tuesday. So maybe that would make more sense why the 2.25 puts and the 2 even puts are lighting it up on a week when nat gas is on fire to the upside. That'd make more sense. So let's assume, I'll have to go out here and dig a little bit after the show, but let's assume probably some 2.25, 2 even put spreads went up here this week, listeners, because it seems like those OIs are lining up. 27,000 of the 2 puts going up this week as well. The big day was actually Tuesday. Again, like the 2.25 puts, 10,500 there. Net slightly closing there. So maybe taking a chance to roll up on the 2 puts up to the 2.25. Now the nat gas is rallying. That could possibly be interesting stuff here, nonetheless, out here in nat gas. Nat gas on fire from a vol, from an underlying, from a skew perspective, everything lighting it up out here. It's a fun product, Sean, because week after week, you don't know what it's going to do. Is it going to rally historically like it did this week? Is it going to sell off? It does seem like they're putting a lot of weight on this forecast for a very cold winter, which we all know what happens, Sean, when you put a lot of weight on prognostications, right? It can never come back to bite you, right?
You're right. Yeah, exactly, right.
All right, Sean, you're our guest, so you get to choose where we hang our hats next. Should we go maybe to metals? Is another product that's lighting up your tape here this week? What should we talk about? Metals. I think we can do that. Metals. All right, let's go here out to gold. Let's pull it up. Listeners, if you go to your drop down, go to that little blue drop down there, click on metals, and let's go out to gold. Remember we were talking last week, listeners. I think we have a listener question about this too, so I won't get too much into this. You guys are all over us with the questions this week, which we love. Keep them coming. About the skew and the interesting findings that Eric from CME found when looking at options skew, particularly call skew, and how that impacts price action in the metals. Let's look what's going on here this week. Back north of that much ballyhooed, much watched 1,500 strike, listeners. Gold at about a 13.5, coming into right now here, right in the middle of the show here. So we're up about 0.5%, not a huge move out here in gold land. This puts us pretty much at our highest level and about 5 weeks in terms of finishing well north of the 1,500 strike again. Net on the week, we're up, looks like, not quite 10 handles, about 8.25 handles out here. So that still puts us firmly north of the 1,500 strike, which I know a lot of our gold bulls in our audience will be happy about. Let's see here. DEES was where the action was this week, doing about 41% of the paper. So let's see what's going on out here from a vol perspective. Vol actually off a little bit, which if you know a lot about gold, it's been a bit up of late, but traditionally gold vol has kind of been stuck in the doldrums for quite a while and given back a little bit of that even this week. So whatever little bid there was, slowly eroding out here in gold land. On a skew perspective, we like the metals from a skew perspective. They always tend to move a little bit. Looking at the metals skew out here, the puts last week, 5.4% cheap to the at the money. This week they are even cheaper, about 8 points. It's coming in about 3 percentage points on the put side, getting cheaper. The calls were 9% rich this week, nearly 13%, 12.9%. So calls catching a bid this week, listeners. That's what's happening out here in DEES in gold, which is kind of interesting. Let's see what might have been driving that. The biggest print out here this week in gold land. Let's do a quick scan. Yeah, it looks like it was these DEES 1,500 calls here. Number one with the bullet, 7,000 contracts. That puts eurodollars in perspective again, doesn't it, Sean? We're talking 7,000 contracts for the most active thing in gold. And what?
$250,000 in one strike, yeah.
$250,000 on not even a strike. The puts, I'm sure, did a bunch too, but it was just the calls. Just the calls.
Right.
Doing $250,000 contracts. That's almost, let's look really, really quickly. Let's look at the entire gold complex. Almost $250,000 contracts in the entire complex this week, Sean. So that just puts the monster, the beast, the Leviathan, that is eurodollars, into a little bit more perspective out here. Let's see. Number one with the bullet out here, 1,500 calls, 7,000 of these bad boys. Not surprising. People like that even number level in gold and in the metals. 1,500 is where the action was. The lion's share actually going up today, about half of that, almost 3,500 of that 7,000 going up today. 1,500 Monday and Tuesday, and about 1,000 yesterday. So a lot, and actually slightly closing, but again, we don't know about today's paper out here. The number two are the 14.5 puts, also doing about almost, actually a little over 6,000 here. The big day was yesterday. 4,000 of those going up yesterday, and that was actually opening. So a little bit of tumult out there. Of course, you have the the Fed decision obviously weighs on rates, weighs on the markets. The markets have been tumultuous this week as well, so we've seen gold having some interesting moves. Some people piling in on the 14.5 put. So a pretty tight strangle / risk reversal there as well, 14.5, 1,500. Those are two strikes that you probably would expect make a lot of sense coming into the movements that we've seen out here this week. So 1,500 calls, maybe that's why the calls catching a bid out here this week in DEES, in the metals here. All right, let's see. How are we looking for time? You know what, Sean? We've got a lot of good questions about products from the listeners. Should we move on? Let the folks join us on the show here?
I think it's a great idea. Let's hear from some listeners.
All right, then, without further ado, it is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Sean and I talking about steak here in the intro, making ourselves hungry as we're coming into your questions. It is, of course, the Futures Options Feedback section. Let's start here. Actually, Sean, you got them in front of you. Which question do you want to start? You get to pick where we go, sir. We got a lot of questions on a lot of different.
There's a question from Beams on Russell 2000 puts. Why don't we?
How did I know? How did I know you were going to start there? All right, we'll go right to Beams. Mr. or Mrs. Beams asking, I think the long-term Russell 2000 put trader is a seller, taking advantage of inflated put skew to generate higher premiums than comparable SPY strikes. Your thoughts? Well, I kind of alluded to this earlier, Mr. or Mrs. Beams. And you're right, this is not the week. I was going to try to pull up some paper to be emblematic of this, but unfortunately it's not the put week out here in Russell 2000. It's the call week for whatever reason. But, yeah, it is interesting to see. That has been kind of par for the course of late. When we see big prints out here in the multiple thousands of contracts, chances are they are decent beyond, and they are, 5, 10, 15% out of the money, maybe more. We saw some puts going up, I believe, like 1360 recently, that kind of stuff. So, I don't know, Sean, you see this paper flow even more than I do. What do you have to say here for Beams? Do you think he or she is right?
I think Beams is referring to a couple weeks ago, there was a massive put trade in Russell 2000, and I think he's referring to that transaction. But yeah, this is exactly what they do. They look to generate higher premiums because the skew in Russell 2000 is at a level where you can take advantage of those higher premiums in the index options. So it's mostly harvesting then you're seeing out there? There's not a lot of hedging? Well, there's the other side of that transaction, which is the hedge for someone, right? So I actually think that these hedgers are finding the premium volatility harvesters, and they're finding a point where they're both comfortable getting into a trade. Yeah, so I think the customers are coming in. They could very well be coming in looking to harvest a little bit of premium. And you got obviously someone taking down the other side, liquidity provider, market maker, someone out there, maybe a desk taking down the big prints and taking it for themselves. But you're right. I'll have to dig in a little bit more when we see some more of these prints go up and see exactly when and what they're up to, what the market maybe was, how they're kind of executing this. Maybe that might be a little homework for you, Sean. For next time you come in, maybe we'll do a little research. What do you think? Beams is giving you some homework. What do you think? Thanks for the homework, Beams. Looking forward to looking at this. But again, I agree. I think there's I've made this expression several times on the show, but buy puts when you can, not when you have to. So you have that now. Then there's so many trillions of dollars benchmarked to Russell 2000. It just makes all the sense in the world that there's someone out there that needs some downside protection, and there's a volatility trade for that as well. All right, let's see what else you guys have up your sleeves. Jake, a lot of creative handles today, Sean. Jake and Beams was kind of interesting. Jake wants to know, why do products like dairy and iron ore that move quite a bit have such light
or non-existent options volume. And, this is another week. We're just talking about you're right again. Class 3 milk was up nearly 5% this week, and iron ore up nearly 6% this week. So those are two products that you're right, particularly lately, have been trading, and yet for whatever reason, they do not do a lot of options. We talked iron ore before. It's just not really an options product. Dairy, we talked about it. Let's pull it up again this week. Let's just see. Maybe we can get some updated stats here. If you want to find the dairy for yourselves, listeners, you got to go into the ag drop down, then go to dairy. We're talking class 3 milk, so let's start there. Let's see if we have any paper. Actually, nearly 13,000 contracts this week, so that's not bad for a product that doesn't do traditionally a lot of options contracts. And the reasons for that are many and varied. A lot of these are obviously have robust futures markets, and that's where the liquidity has grown up. And for whatever reason, maybe there isn't a huge hedging need out there, maybe demand. There hasn't been a lot of demand for the options. The liquidity providers haven't migrated there as a result, so they're not maybe streaming a lot of crazy, aggressive, tight quotes in that product because no one's out there trading it. It's kind of a chicken and an egg thing. Sean, you're out there listing new products all the time. You can't just make something be a hot options product, right? It has to have demand there first. It's the old catch-22 of any product. You have to have volume to beget liquidity, but how do you get the liquidity without the volume, right? It's kind of the old thing that every new product has to deal with, right?
Absolutely. And complimentary of CME as well. They understand these markets. They understand their clients. They have a great commodities team that is out there talking to these traders that are trading this product. So they totally understand this. And so I'm not surprised. The dairy universe is much smaller than the financial interest rate universe, right? So.
Yeah, these are also esoteric products, like you mentioned, iron ore and dairy. I mean, if you don't follow those markets very closely, it's kind of hard to fire up whatever your brokerage account of choice is. So I'm going to sling some iron ore today. It's not the thing your proverbial grandmother from Iowa usually says, right? They may be lured to gold. They certainly can be lured to crude because they see those things quoted a lot. They can certainly be lured into the broad equities on the futures and futures options side because they like to trade there. And even maybe rates on a week like this when they see the Fed. That certainly is something that could resonate with a broad retail audience, even in particular. Class 3 milk, iron ore, not so much. I wish all these products slung a tongue of options here. What was it, Jake? But I think that might be changing, though, for dairy. As it starts moving some more, we see more volatility out there. People are going to naturally be attracted to more. The liquidity providers are going to want to start streaming it more and trading it more because there's more vol, and that will beget a little bit tighter markets, and people might start discovering it. We get these questions all the time. People look at broad equity volatility, whether it's Russell or S&P, whatever it is, and they're saying, maybe it's a little quiet out there. The vol's a little low. Where else can I go that can find some vol? I'm not saying I'm at the point yet, Sean, where I'm going to recommend Class 3 milk, but that'd probably be an irresponsible thing to do. But, it's certainly getting more on our radar these days, which is kind of fun to have a broad, diverse array of products to recommend out there to the audience, Sean. What do you think? Is there a Russell Milk Index coming soon?
There isn't, but we'll be out there talking to our clients just as our exchange partners do. So
you paused for a second. I thought maybe there was something coming there. I was like, oh wait, did I stumble across a secret not to be revealed nugget yet of the forthcoming Russell Dairy Index? But yeah, we're with you, Jake. We want to see all these things trade. Class 3 milk, you'll be happy to know, is coming alive. Not so much on the iron ore yet, but hey, we shall see. Lily Ann Thal wants to know, what's the answer as to why weekly WTI options don't trade? This is like the ongoing question that has plagued us on this show since time immemorial, Sean. Since we first started the first episode of this show, however long ago it was, we kind of started talking about this. If you'll probably see it if you pull up WTI again. Right now, let's pull it up right here. You can find it for yourselves, listeners. Go to the energy drop down, then go to crude oil and WTI, and bam, you'll see for yourselves. And you're right. This is a thing we've noticed a lot. I've talked to many different people about this subject. I've talked to folks in the various energy products at CME on their research, on their options side. We've talked about it with some of the traders out there, the vendors out there, and it doesn't seem to want to play ball with me all of a sudden. Here we go. Let's try it again. But yeah, it's a fascinating thing. And you're right, they don't trade. The weeklies, kind of non-standard outside the monthlies, don't tend to trade. And the interesting thing is people will trade short duration contracts in WTI. They will trade a monthly when it gets down to the final couple of days. They will keep trading. And right now, all of a sudden, it's not wanting to play ball with me at all here. So I can't illuminate this paper for you, but hopefully when you pull it up for yourselves, listeners, you will see it out there. But you'll see this for yourselves if you watch this. The non-standard weekly contracts, those kind of just regular weekly contracts, will do a paltry amount of volume. Here we go. Let's see. Now we're reloading. Let's see if we can get it up here for you to exemplify it for you this week. But in general, yeah, these non-standard weekly contracts don't do a lot of volume, but the monthlies, when they get down to a couple of days left, they will do a lot of contracts. And it's a kind of a mystery. I think we've come down to, I talked about this with Nick a lot of times here on the show. We've looked at how these things are disseminated. I think it comes down, Sean, what it really comes down to, and to Lily and everybody else, is there's the devil's in the details with these types of products. And it seems like the way these quotes are disseminated and listed and are available in a lot of the trading platforms, it somehow obscures the weekly. So they're not as readily accessible as the regular monthlies. Because people will trade a monthly that has 2 days to go. That's a weekly at that point, right? It's just a standard contract that has eroded down to its final couple of days. They will trade that. So they will. It's not a question of they won't trade near duration vol or gamma in crude oil. It's just a question of they won't do it in these non-standard kind of weekly contracts. I think that, Sean, that probably speaks to, and again, you're a product guy, so maybe you can speak to this as well. But in general, it seems like there's some issue with the way the quotes are disseminated or displayed on places like an active trader or some brokers that makes it hard to get at the weeklies. Is that maybe your takeaway as well?
You know, I'm sitting here thinking it's probably not a bad idea to get one of the energy guys from CME Group in here, like Jeff White, their options specialist. He's fantastic. So love to have a more in-depth energy discussion would probably be a good thing.
We have done that. We have done that with just about everybody. You know, I've talked about it with Derek, who's the overall options guy. I talked about it with Blue, who's the research guy. I think we have talked about it with Jeff White, I believe, in the past. Since this show started, I think we have. And it's one of those ones that everybody we ask has a different answer, which kind of makes it even more mystifying as to why this is happening. But, yeah, it's interesting to see that is the case. So they will trade it in the weekly duration, just not in the actual weekly contracts, which is, here we go. It's finally coming up for me. Listen, let's see if we can see it here. And, yeah, with these weekly contracts, we're seeing 366 of the 54 puts in these contracts going out tomorrow. So these are the weeklies, whereas the 60 calls in the standard Ds are going at doing 11, almost 12,000. So it's a very different beast entirely out here. And looking at how much of the paper here. Yeah, 54% of the paper was in the D's contract, 0.8% in the week 2 NOV, and 1.4% in the week 1 NOV. So it's just a funky thing about the way these things trade. I think it has something to do with the way the quotes are disseminated. All right, Sean, let's see. We got time for... Yeah, we can do one. This is kind of an epic one, but I think it refers to an epic report. So let's get to this one. This comes from L. Tim. There you go. Spanish Tim. He or she wants to know, do you guys buy that the metals only sell off when the calls are bid? Sean, this refers to an interesting report Russell and I talked about last week on the show from Eric Norland over there on the CME research team. It was entitled, Gold and Silver Options Are Pointing to a Pullback. And what he pointed out was kind of an interesting, somewhat counterintuitive observation that he noted that whenever the calls get extremely bid in both silver and gold, it's followed almost always by a pretty aggressive sell-off in the actual underlying, which is, like I said, somewhat counterintuitive. You think the calls are bid, people are expecting the thing to rally. And I will correct you a little bit here, L. Tim. He says the metals only sell off. He doesn't say they can only sell off in that scenario. He's just pointed out that, I'll give you a little bit of nuggets from it again, listeners, in case you missed the show last week. Again, this is from his research report. I encourage you to check it out for yourself. It's called Gold and Silver Options, Pointing to a Pullback. He talks about the rallies over the last few months. He also says silver had a 14% correction over the past month and a half, and gold corrected by about 6.5%. Prior to these declines, options markets signaled that a correction might be on the way. Out-of-the-money calls became exceptionally expensive for both gold and silver just before the correction. Again, that's why I encourage you to check out the article because they have great graphs and visuals. You can see it for yourself. He's measuring that 30 delta risk reversals, a 15 delta call, 15 delta put. And he's talking about skewness. What he means by skewness, he's just subtracting the puts from the calls. So the more bid the calls get, the higher that number gets, right? How juicy that skew is. I mean, he points out when that skew gets into the 99th percentile, so super bid, I believe, is a technical term. When it gets to that level, that's when we've seen sell-offs rolling off or coming in the weeks and months thereafter. Yeah, it says when the skewness has achieved those extreme levels, the gold and silver have underperformed over the next 3 months, and that appears to be the case right now. So some of this move has already been played out in the marketplace, so maybe a little late to dive in now, but it is a very interesting nugget here. So with a question here from, what was it? It was from L. Tim. Do I buy that? Yeah, I mean, Eric's not one to exaggerate. Eric, particularly when it comes to metals volatility, that seems to really be Eric's bailiwick. He's made some very great salient points about gold volatility in the past, so I tend to trust him. Not that I don't trust Blue, I trust them both, but I particularly like Eric's reports when it comes to metals volatility and skew. That kind of seems to be where he hangs his hat. So this is an interesting finding. I discussed this with Russell Rhodes last week. Both of us were hard-pressed to think of another example of this in the marketplace, so it is very rare. You don't see a lot of things where a particular wing is dramatically bid and then the underlying shoots in the other direction, like we're seeing here in gold and silver, but that appears to be the case. So yeah, I have no reason to doubt this. Eric's research is usually pretty thorough. I will admit with you that it is surprising, and that's why he wrote about it. It's a surprising finding, and that's kind of what makes it interesting. I think you guys should check it out for yourself. So do I buy it? Yes, I buy it. And have I seen it in other products? I've been looking ever since this research came out. You certainly don't see this. Sean, can you think off the top of your head? I'm putting you on the spot here. Name right now 5 products that have exhibited this in the past month.
Oh, don't throw me on that spot. Come on.
But it is. Would you agree? This is a very surprising finding, is it not?
It's incredible. Yeah, that statistic is really interesting.
All right, listeners, unfortunately, that music means we've come to the end of the Futures Options feedback. We've also come to the end of this excellent sojourn through the world of futures options. Let's see, what do we talk here? Talk some rates, talk some equities, we talk nat gas, talk WTI, we talk metals, we answered... Yes, milk. We answered your questions about milk and iron ore. See, people who complain about their product not on the show, Sean, they just weren't listening this week. We touched on just about everything.
We are diversified.
We are. I think the only thing we missed is ags. I know we got some ag heads out there, so I apologize.
Oh, in a big way.
You're right.
I don't know if you recall.
We can't. This show could be 7 hours, Sean, if you wanted it to be. The feedback we get. How come you didn't focus on this esoteric product? I wish we could do them all. Ask for a 7-hour show next time, and maybe we'll see what we can do. But that music, unfortunately, means we've come to the end of our journey. But Sean, before we go, I know you're running around. You were just at FIA. Hopefully your travel schedule will calm down for a little bit. But what's in the near-term future for you? And also, if folks want to learn more about what you guys have cooking in the land of FTSE Russell, where should they go? What should they do?
Smith at FTSERussell.com. FTSERussell.com is our website. You can go to our partner exchanges, CMEgroup.com and SIBO.com as well, SIBO Global. Lots of information there about our products and our indices as well. The index products have been doing extremely well, as I talked about earlier in the show. Personally, I'm going to be around for the next couple of weeks. So if you don't mind, I'll be coming back into the studio.
Did I mention I'm on the road for the next 3 weeks? Oh, I'm sorry.
Oh, great.
I don't know how that works out.
There you go.
We'll have to arrange some delicious burgers or there's a Gibson's right over there. You'll have to go hit that one over there. But check him out and give him a follow over there on the old Twitters at FTSE Russell, FTSERussell.com. It's also a place to go for all that data you guys are always asking about the buy rights and the premium harvesting and all those strategies. They got the data over there. Go check it out, FTSERussell.com. And of course, you can always check out this show and all the reports, all the cool stuff that we do, CMEgroup.com/TWIFO or TWIO, TWIO. They both work. While you're there, check out that report by Eric from yourself. Judge for yourself whether you buy it or not. It's not for me to say whether you should buy it. I think you guys should read it for yourselves and make your own conclusion. I don't know what to intuit from, what was the name here, Lilienthal's question. I'm guessing from his question he doesn't buy it. But I think it's an interesting bit of fun. Oh, it was L. Tim. I'm sorry. L. Tim didn't buy it. So maybe you don't. But interesting stuff to read nonetheless. CMEgroup.com/TWIFO. Begin your journey. And on behalf of Sean and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We can do a whole question show. Maybe we will one of these days. Then you can't blame us if we don't touch on your product because you guys didn't write in about it. So it's up to you. If you want a question, if you want a product, if you want something obscure on the show, let us know. We'd like to hear from you. Or send it to Sean, Smith at FTSE Russell, who maybe forward it to me, and you can bother him in the interim. And we'll see you back here tomorrow at 1 p.m. Central for Volatility Views. And we kick it all off again on Monday with Option Block, and we're back here on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.